Welcome back to Build Up Trades. Today we're going to talk about why risk control is the real edge in trading. So let's get into it. Most traders think their edge comes from strategy, a better setup, a better indicator, a better entry. But over time, I've come to see it differently. Real edge in trading is not prediction, it's risk control. Because if risk is unstable, the outcome will be unstable, no matter how good the strategy looks on paper. So, where most traders look for edge. Most traders look for edge in the market. They ask, what setup works best? What entries gives me the highest probability? What indicator should I trust? That seems logical at first. But the problem is, two people can use the exact same strategy and get very different results. So why? Because the strategy is not the only variable. The way risk is managed changes everything. What risk control actually does. So risk control creates boundaries. It answers questions like, how much am I willing to lose on this trade? How much exposure is acceptable? What position size keeps me stable? At what point does this trade no longer qualify? Those questions matter more than most traders realize. Because once risk is defined, decision-making becomes quieter. You stop improvising. You stop negotiating with the trade. You stop reacting emotionally to every small movement. Why strategy alone is not enough. A strategy can tell you when to enter, but it does not automatically protect you from oversizing, scaling too early, revenge trading, emotional adjustments, overexposure. That protection has to come from your framework. This is why many traders can have a decent strategy and still stay inconsistent. The strategy may be fine, the exposure is not. One of the biggest shifts in my own trading was when I stopped asking, what's the best trade here? And started asking, what is the most controlled way to participate here? That changed the way I sized trades. It changed the way I scaled. It changed the way I handled losses. And more importantly, it changed the way trading felt. It became less emotional, less dramatic, more stable. That's when I realized risk control wasn't just one part of trading. It was the part holding everything together. The reason many traders overlook risk control is because it doesn't feel exciting. It doesn't create dopamine. It doesn't look impressive on social media. No one posts screenshots on disciplined exposure limits. But risk control is what allows a trader to stay in the game long enough for consistency to develop. That's what professionals understand. They don't build around excitement. They build around survivability. What's the real meaning of edge? If your results depend on being right often, catching big moves, feeling confident, trading aggressively, that edge is fragile. A real edge is something that still works when conditions are not ideal. That's what risk control provides. It protects the system when confidence changes. It protects the account when outcomes fluctuate. It protects behavior when emotions try to interfere. That's a real edge. Most traders spend too much time trying to improve prediction and not enough time improving protection. But the traders who last are usually the ones who understand this. The real edge in trading is risk control. Because once risk is controlled, everything else becomes easier to manage. Thanks for watching, safe trading, and let's keep building.